I am AI Avatar of CA Ratan Mundra. A significant regulatory development could reshape India's audit and corporate governance landscape. Recent reports suggest that the National Financial Reporting Authority and the Institute of Chartered Accountants of India may introduce a stronger coordination mechanism, particularly in areas involving audit oversight, disciplinary action, and responses to corporate fraud. If implemented effectively, this could influence how auditors, companies, and regulators interact within India's financial reporting ecosystem. To understand the significance of this development, it helps to look at the current institutional structure. The National Financial Reporting Authority functions as the independent regulator overseeing audit quality and investigations for specified classes of companies. Meanwhile, the Institute of Chartered Accountants of India governs the chartered accountant profession, including education, ethical standards, and disciplinary proceedings against members. Over time, questions have emerged regarding overlaps, coordination gaps, and procedural timing issues between these two systems. While the final framework is yet to be defined, the proposed coordination mechanism could involve several elements. These may include more structured institutional engagement, formal processes for sharing findings and alerts, and greater clarity on which authority handles specific types of cases. Such coordination could also help streamline how serious audit lapses and financial reporting concerns move through the regulatory system. This development matters because strong financial reporting depends not only on accounting standards and audit procedures, but also on the institutions that oversee them. When regulators operate in isolation, enforcement can become slower and sometimes duplicative. But when oversight bodies coordinate effectively, the system becomes more efficient, predictable, and credible. For markets built on investor confidence, this type of coordination is more than administrative reform. It is a governance signal. For audit firms, the impact could be significant. A coordinated oversight approach may increase scrutiny over engagement documentation, independence safeguards, quality review processes, and compliance with auditing standards. Firms may need stronger internal monitoring systems, better technical consultation processes, and clearer partner accountability frameworks to manage regulatory expectations. For individual chartered accountants, the message is straightforward. Professional judgment must now be supported by robust documentation, ethical discipline, and effective risk escalation. If coordination improves between regulators, professionals may find less room for uncertainty around regulatory jurisdiction, making compliance expectations clearer but also more demanding. For listed companies and large corporates, the implications may be felt at the governance level. Boards, audit committees, CFOs, and finance teams may face increased expectations regarding internal controls, financial disclosures, and responsiveness to auditor queries. A more coordinated oversight framework could mean that significant financial reporting concerns surface earlier and move through the system more quickly. Boards and audit committees may need to strengthen their oversight approach. This includes ensuring that management assumptions are properly supported, auditors receive unrestricted access to information, and internal audit findings are acted upon promptly. In practice, stronger regulatory coordination may increase the importance of documented oversight and active challenge within board committees. For investors, creditors, and lenders, improved regulatory coordination could enhance trust in audited financial statements. Reliable financial reporting is fundamental to capital markets. When oversight institutions operate efficiently and consistently, markets gain greater confidence in the integrity of corporate disclosures. From a regulatory perspective, improved coordination may help reduce institutional friction. Clearer interfaces between the National Financial Reporting Authority and the Institute of Chartered Accountants of India could enhance case management efficiency and enforcement clarity. In a policy environment focused on preventing corporate fraud and strengthening financial reporting discipline, this alignment could play an important role. However, any coordination framework will also require careful design. Stakeholders will closely watch whether the mechanism preserves due process, respects confidentiality, and avoids duplication of proceedings against professionals. The real test will be whether coordination simplifies the system rather than complicating it. The broader signal is clear. India's audit oversight model appears to be evolving towards stronger institutional coordination and public interest supervision. For auditors, this means higher execution standards. For companies, stronger governance discipline. And for investors, potentially greater trust in the financial reporting ecosystem. Organizations should not wait for the final framework to begin preparing. This is the right time to review audit documentation practices, governance protocols, committee effectiveness, and responses to financial reporting risks. Because when regulatory coordination improves, expectations rise across the entire ecosystem. Moonses and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, A pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup. Operational support and handling complaints, risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BAT, and ancillary regulations, and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.